right. Can you guys hear me? Let me get the chat open here. There we go. All right, we'll give it a few minutes here just to let people join. I just sent out the links. What's up, Chad? What's going on? Saturday, and we're staring at charts. That's what's going on. I'm not on Twitch right now. I'm just streaming to YouTube. Just for this one, yeah. Trying to keep it simple. It gets convoluted when I'm streaming to multiple platforms, and then I got people trying to type messages in different platforms, and I end up missing, half of them. Is the mic low? Can you guys hear it okay? If so, if it's kind of quiet, I can turn it up. Okay. Let me see if I can turn it up at all. Let's see. What software am I using for charting? This is TradingView. Yes, it will be recorded. Should be. I told YouTube to record it. Is this any louder? Does it sound any better? All right. It looks like we got good. Looks like we got a handful of people that have joined here. So the reason I want to do this is because it seems like we've got a lot of new members. And I know, in BlackBox, people post a lot of charts, or we talk about, charts. Maybe you don't know exactly what we're looking for. Maybe you're newer to this, and all of this seems really foreign. And I tell people all the time, when I talk about what I do, day to day, I talk about, why it's so important to learn how to chart, because if you don't know anything about this, but the best company in the world, let's say you think that's Tesla, you might think that's the best company in the world, and it might be. How do you know when to buy it? Because those are two very different things, right? Buying the best company, or buying the best company at the right time are two very different things, and that's what analyzing the chart is all about, trying to figure that out, right? Please, not square. So I'm not going to be. This is not going to be super advanced. This is really, I'm intending to kind of cover the basics for people that are really struggling at identifying, what makes a good entry, what makes a good spot on the chart, what should I be looking at as far as, entries and exits, and and that sort of thing. And so I'm just going to kind of break down my process in the way that I look at things. Yeah, we can talk about Square, and we'll talk about a few others, but I'm just going to kind of break down the process that I use and how I look at things. So, and then feel free to ask questions along the way. I want to make sure I cover things that are important, relevant, things that you have questions about, not just me droning on and on. But as a starting point, let's start here. I use TradingView to do all the charting, primarily because I like the way that I can lay out the different time frames. If you see up here under select layout, I have all these different options of ways that I can lay these charts out, and I use them. I use them all for different reasons, right? Right now I've got Square on here. Hey Renee. And you'll see that I'm looking at 3 different time frames here. I'll change these to try to get the picture that I'm looking for, but really what I'm trying to do when I first start is I want to look at multiple time frames and try to tell a story about where this stock is, where did it come from, what does the history look like, and so many people when they first get started. Let me change this. Why is it not letting me? There we go. Change this to a 3-minute. A lot of people start and they're looking at a 1 minute or a 3 minute. They're trying to scalp this stuff, and they're trying to find entries and exits based on a 1 or a 3 minute time frame. If I take this down to a 1 minute, and that never worked out really well for me. Yes, Hamza, it is recorded. That never really worked out all that well for me, because this just doesn't give me, you can draw areas of levels of support and resistance intraday, and yeah, they'll work when you're scalping sometimes, but it's like, when a ticker, makes this move, let's say up in here, this doesn't really give me any sort of perspective as to, are we near all-time high up here at 230? Are we near a 52-week low or a serious area of support as it starts dropping down here to 190, 191? Looking at a 1 or a 3-minute chart, how am I supposed to know in the wider scale where potential areas of support might exist? Otherwise, you're kind of just guessing, right? When you see it make this bounce here, you're like, oh, okay, well maybe that's support. Let me buy it. Maybe it found support here. Oh, we made a higher low. That's how a lot of people trade. They go, oh, we made a higher low. Okay, let me buy it, right? And as you can see here, that in this scenario, that would have worked. But I like to look at multiple time frames before I ever make a decision. So, and Square is a good example of why I like to do that, right? So what you see here at the top is the 3-minute. Over here at the left is a 144, and then on the right is the daily. And usually what I'll do is go, okay, the daily, I kind of see what's going on. Let me zoom in on that real quick. Oh, look at this run that it's had. Now this starts to paint the picture for me that, man, since March 2020, this thing, here was its March pullback, and then it has just been a rocket, right? The trend has clearly been up, like a lot of other things, right? I'm not going to get into that, but if we take the pandemic out and we take any other sort of binary events out of this, I can look at this chart and say, well, the trend has been up, right? And then I start doing, kind of if this, then that. That's how I like to trade. I like to look for, okay, every time this happens, then this happens, right? So I kind of start to look at the, try to put a picture together here that, okay, we hit a high, it came down. This red line down here is the 89 EMA on the daily. So it came down, it bounced just above that. came down just to bounce just above that 89. So if I play that if this then that game, like, okay, well, the 89 seems to be a solid place to buy it. That's where the buyers come in, right? So there's one possibility or probability, and that's what we're trying to do. We're trying to put, the highest number of probabilities for a successful trade in our favor. So I look for multiple areas of support. I look for the strength, or the history of bouncing off that particular, EMA, which you have it here. You can also see there's a trend line here. So if I just take this trend line tool and I go like this, you can see it lines up. There is a trend line there, right? 3 points of contact make a trend. So you can see once it broke that trend line, what happened, right? Then it spilled along with everything else. And a lot of time, and obviously ask questions. I'm just kind of going through, how I look at these things. A lot of times when I draw a trend line, I will also draw a parallel channel, because a lot of times the two work very well together. If I draw the trend line and I go, okay, this is kind of the trend line that it was bouncing off of, expand that into a parallel channel, and a lot of times you will find this channel that it bounces back and forth, inside. And you want to be buying near the bottom of that channel, selling near the top of it. So you can see how it's worked, just that parallel channel, parallel line based off that trend line. I expand that to the top and you can see how long that channel has been important, right? And I always say, you got the parallel channel correct if you see action at the center line of it. You see that gray dotted line, the midpoint, you can see movement there, using the middle point of that as support and resistance, because to keep the uptrend going, with strong momentum, you'll get bounces near the midpoint of that channel. So good question. Let me address some of these here. So Paul Theroux, going back how far? Well, it really depends on if I get the full story or feel like I have the story. I can zoom this back to 2016 and yeah, pretty clear. I've got the story. If I don't, then I'll go back further. Sometimes I'll go to a weekly and I'll show you an example of that. We're going to cover, I'll show you MDP's chart and why I did what I did. And we'll go back to a weekly time frame on that one. Are you using Fibonacci retracements or extensions? Yeah, so I use, in TradingView, I use this Fib retracement tool. Now, when you configure this tool, you can configure it to show you also extensions. So it's like, one tool that I can use, and I don't have to, I don't have to use a separate tool. You just kind of go in there and enable these other values. So it lets you see those extensions. When it broke the trend line, wouldn't you assume more downside? Yes, and that's what this is all about. Is, okay, we broke that trend line, great. Now, what would you be looking for? Where are possible, areas that we might find support? What would be the, a safe area to consider an entry? Right when it breaks this trend line and it breaks that 89 EMA, which it had not done previously, that's a good, that's a good area to potentially look for a short setup. And the reason I say that is because you don't have to hold it very long to know if you're wrong. And that's when we talk about charting and setups and risk reward, probably the most important factor is the reason we buy at support is so that hopefully we know very quickly if we're wrong, right? You don't have to let the thing, continue to drop You just, okay, it broke that line. It didn't hold. So I can get out and look for another entry or play it a different direction or move on to another ticker or whatever, the case may be. But that's why we draw these lines and we come up with a strategy for our entries, is because we'll know very quickly if we're wrong. When we combine things like trend lines, support and resistance levels, and fibs, then we can start to find high probability setups. So you can see, and I will go into a little bit about how I draw fibs, how I use them. But you can see here this fib that I drew right here. From the impulse low to the impulse high, we pulled back to the 618. That was a retracement to 618. It bounced, kind of double topped in here, a little bit higher high. Came down to a 50% retracement, which is also that 89 EMA that it bounced near previously, and is also the bottom of this channel, right? That would be a high probability setup. You have three things right here, that would all be indications of support, or that you would expect those things to hold as support, similar to here. Now when it broke this channel, you had that 89 EMA, you had the bottom of this trend line, but there was no fib in here. I might be able to find one if I drew some more, but you still had two probabilities in here. It's still a safe bet to try to take it, depending on market conditions. Obviously, market conditions were not favorable for a bounce or for something to go up. And so you kind of have to have that in perspective. Like, all right, everything's going down. The market's, not looking great. You probably want to look for more of this kind of setup where you have those, okay, I got three things working in my favor here, and there's a fib. There's a fib spot right here. There's a fib level. There's the 89 EMA. There's the bottom of this channel. All right, I'll take a shot there, right? So, I guess to backtrack a little bit, I go out to the daily first, like we have here, and try to tell this story. Like, is there a pattern to where it's finding support and resistance? What EMAs do you use? I will, here, because everyone is going to have that question. I will give you the values right here. If you want to screenshot that or whatever, these are what I use. You can see the low time frame EMAs. These are the ones that appear on a chart that is less than 13 minutes. So 3 minute, 6 minute, a 9 minute, whatever. These are the EMAs that will be on the chart, the 21, 34, and 200. Sometimes I use a 233, just kind of depends. I can't give you any good reason why I would use a 200 versus a 233, besides there are some tickers that seem to react at the 233 and some that react at the 200. And then any chart that's 13 minutes or longer in length, I have more EMAs. And these are the ones that I use: 13, 21, 34, 55, 89, and then a 200 or 233. And the reason for that is that these numbers are all, numbers that are based on the Fibonacci sequence. So, they're not out of nowhere, but this is the reason we use those values. So yeah, feel free to copy that, write them down, whatever. And I'll go into more detail as to how I use them. But, at the most basic, I guess at the most basic starting point, when your faster moving EMAs, like your 13 and your 21, start to cross up, and you get this kind of this ribbon effect, and the ribbon flips. You can see it right in here. All the EMAs flip, and now you've got your faster EMAs, your 13, your 21, your 34, above the 55 and 89. That's showing you that's your momentum. Momentum is up, right? And you really, for longer term swing trading or something like that, you can stay in this trade as long as that, you don't want to see the 21 cross the 34 to the downside. You can see even on these pullbacks, it still stays above, right? Until they do this flip where everything crosses over and starts, pushing to the other side, that tells you momentum really has shifted, right? Hema, I use EMAs for everything except for the 200. I use an SMA. Chad, yes, the indicator is available. I'll show you how to get to that. It's in a private repo, but it's free and you're welcome to it. Both of these indicators, this off chart, vendor's off chart and on chart, these are both, you can have them. Yeah, I mean, Max, this is essentially, it's the same, right? The reason for this on chart indicator was because I switched those EMAs depending on the time frame, and I just wanted something that did it for me. So, and it does. Okay, so we're looking at the daily. People, I'm going to actually get rid of these fibs. We talked about that a little bit. Get rid of that channel. Okay, let's just go back to kind of the blank chart here and figure out, where support and resistance may exist, right? I'm going to get rid of this alert. That's an old alert that I was kind of waiting for a pullback to, which we got. Okay. So really, when I'm looking at support and resistance, I'm looking for areas on the chart where price changes direction, right? And you could go in here and start drawing, you could put lines here at every level where you see a pullback or something like that. And a lot of times you'll end up with, far too many lines, which is why, it's a good idea to look for multiple probabilities, multiple things that line up to create those levels, those buying opportunities, right? We all understand that where price changes direction, that is resistance or supply. That is where people are taking profit, right? And the stock pulls back, and wherever it changes direction again, that is demand. That is where people are willing to buy, and that creates that level of support. Once you get through a prior level of resistance, you expect that resistance to become support. That's the way that it works, right? We all know this. So what I look for is, okay, this was prior resistance in here, and it pulled back. Okay, this was a support level near the 89 EMA. Not a bad place to take a shot. We probably did not have a trend line yet, but still wouldn't be a bad place to take a shot here off the 89 EMA. But that has now become support. So now we push up. On the daily, we don't hold above that previous resistance. It rejects, it pulls back. And I realize that when you're looking for entries and trades that you're not doing this while looking at the daily chart here. So I will zoom out or zoom back in and we'll kind of see what this looks like, on a 13-minute and a 3-minute. But it tries to clear this previous resistance, it fails, it pulls back, makes a higher low here, doesn't come all the way back to the 89 EMA, it makes a higher low and then starts pushing up. And what happens when it breaks through that resistance level, you get this pullback, not quite there. Let me put a price range. I like this price range tool because areas of support and resistance are very rarely an exact spot, right? It's kind of like, all right, well, anything in here, because this is, this was the previous breakout high. Anything in here could be considered support. So let's see where it goes. It breaks through, breaks that previous high, comes in, tests this range, finds support, and continues to move up. So this was resistance that once it was finally cleared, it became support, and then, continued higher. So let's talk about why I got in Square on Friday, right? It's been selling off for a few days here, obviously. Um, but it came back to this level that has previously acted as support. Before that, it was resistance. And it's hit here multiple times. So when I see that on the chart, for me, it's a relatively low risk entry, right? I'm like, I like Square. I want to be in Square. It, you know, has fallen from its highs that were all the way up here, 284. What was its 52-week high? 283.19, right? I didn't want to buy it up there. No. But now that we have a little fear in the markets and things are kind of, things pulled back a bit to levels that, could be considered, all right, it's not 280 anymore. 190? All right. There is, I can make a case as to why this would act as support, and maybe it's worth taking a shot at that point. So that's why I look at the daily. Again, look at the weekly. MDP, everybody's heard me talk about this one. Let's talk about why for a second. This is a scenario where you could even go all the way back to a monthly on this one to figure out why I bought it when I did. Let's see, what am I missing here? Any questions? Yeah. Why EMA versus MA? You just kind of have to understand the difference, which is the exponential moving average uses the most recent price action. It gives more weighting to that versus a standard moving average, which gives equal weighting to all the price action within the scenario. How do you know when a trend will continue? Say if a trend breaks, or how do you know it will continue to the upside or downside, and for how long? Well, that's where we come up with kind of price targets, right? Where's your line in the sand? Where would you cut it? And if it does hold, what are potential areas of resistance where you would, look to take profit? And we'll be talking about that. So for MDP, we're going to go back to the monthly, right? And every chart kind of tells a story. So what's the story here? There is some fundamental analysis, that I have done on this, but if we take that out of it, no, Mr. Mike, it was not on a scan. That's a longer story. This is a company, if I go back on the monthly, you can see this is a company that's been public since, I think they went public in 68. So this is, this has been around forever. But when I look at the chart, right, if I take everything else out of it and I look at the chart, let me delete this box here, and I'll delete this box and this line and this line. Okay, so looking at this chart on the monthly, we can come up with a couple of key areas that are pretty clear as far as support and resistance. And listen, support or resistance on a monthly time frame, is about as strong as it gets. Why? Well, because that tells you that no matter what was happening for multiple months or a year or whatever, no matter what was going on, this was resistance. No matter what was going on in the world for multiple months or multiple years, this was support. That's what it tells you. And I like using those longer time frames because, again, it's like there wasn't one binary event that happened. There wasn't one, headline that lasted 2 days. It wasn't a, you know what I mean? These are strong levels, meaning when shit hits the fan and everything looks like it's, gonna crater, this is where people are willing to buy it. And when everything seems great and everything is on the up and up and the thing's moving up, people are still gonna sell at these levels. So that's why we use these longer term levels, right? So 2008, 2000, MDP did its thing, whatever. It had this previous area of resistance. It made this nice big cup. It broke out. It pulled back to the 89 on the monthly here, and then continued higher to its all-time high right up here, 63.39. And then what happened? 08, 09, recession. Things are not good. The market's in the tank. You also have, this is where it gets a little fundamental, which is at the time MDP was focused on print media, magazines, and everything was going digital, so that played against them. And it just was in free fall mode, right? It broke this 89, it just kept on going. This is the 200, and just kept on going. It got a little bounce here. Where did it bottom out? Right in here. Right, 10, let's call it 1060 area. Right in here is where it bottomed out. This is where people said, okay, it might be bad, but it's not that bad, right? It's not bad enough that we're not gonna buy this thing, and absolutely nobody wants it. They wanted it down there at 1060. Why might that be? Well, the last time it broke that level, you see what happened, right? Early on, when it made this push up and it broke above this prior resistance, that's when it took off, right? So you had all these people in the rear view back here in the 90s that watched this thing just go higher and higher, and they had their chance to buy it here and they didn't. Some people did and probably took profit too early, and others, just watched it go higher. And they're like, man, I missed out on that opportunity. If it ever comes back to that, I know what this thing is capable of. I know what they do. I can't buy it up here, but man, if it ever gets back down here, I'm buying it, right? That's what creates that support on a longer term chart like this. So that's what happened. The recession 08, 09 pulls all the way back. It comes back to this, 1050, which is where people say, that's enough. Okay, let's buy it. We like it. It's not that bad. Things are improving, whatever. And what does it do? It goes on another run, goes and makes a new all-time high up in here around 72. Okay, it finds some resistance near the previous all-time high because, man, those people that were up in here, right, that bought and watched this thing just crater, you have all these people that are like, oh, if I could just get my money back, I'll get out. I'll never do this again. I promise. It gets up in here, and yeah, you get some sellers. Profit taking, some, from down here, along with people that are, now back to break even, and they just want out, right? So that usually creates that overhead supply. So it fumbles around for a while, a couple years, and then some news happens. What news? Well, this is fundamental again, but they bought a company called Time Inc., and it was not a great acquisition. They paid way too much, right? So their earnings weren't good. They spent way too much money. Here we go. We're kind of in free fall mode again. We get in here to the 30s, and this actually looks like, what would be a decent area potentially of support, right in here around 35. If you call it a range down to right in there, 34.60 or so. This would be an area where you would, think about, maybe it'll hold here. Maybe I should pick some up. That's on the monthly. Let's go look and see what happened on the daily. And I know what happened because I was watching it, but on the daily, September 2019, let's go take a look. September 2019, oh, look at that. It wobbled around that line. It tried to hold. There was people in there willing to buy it, right? That were, watching it break this resistance. When it did, it went to all-time high. So when it came back, people saw that as a reasonably safe entry, right? Right in here, this 34. And it didn't hold. that gave. So when it did, it took out some stops. It took out people that were like, yeah, no, it's not going to work. Notice you also had all of these MAs on the daily, all these EMAs flipped negative, right? Momentum to the downside. It just can't save itself. It cannot catch itself. It is failing at every attempt to bounce or to move up. Like here, it can't get above that 89, right? It just immediately gets rejected and keeps pushing down. Where does it go? It goes back to the same level that everyone else that had to watch it 2 times before rocket from that level and go make all-time highs. It comes back to the mid-10s. This is where I got interested, was right in here. I did pick up a little bit up here at 33 because this looked like, all right, that's probably enough. This is probably a good spot. Yeah, they made a crappy acquisition, but it's already fallen from 73. 33 is not a bad entry. At the time, they had a good dividend. Right now, the dividend is suspended. So then it broke that. It went into free fall mode, came back down here to the lows from the recession lows. And it tried to make a bounce up on a decent ER and got knocked back down to that same level, 1040 or so. And look what it's done since, right? It's now moved on this monthly chart. It's pushing, through these moving averages. If we go out to the daily, we can see when the flip happened. In 2009, we can see when the EMAs flipped to the upside and momentum shifted. Just like here. We can see they tried to make that flip on this first pop, right? And but it wasn't true. Like the EMAs did not flip. You didn't get that ribbon rollover like you did right here. See the difference right there? Look at that. So how do I know that this is fake? As price moves up and through all these EMAs and it comes up here and then rejects and pulls back, how do I know? How do I have some kind of idea what's going to happen? And it's this move right here on the daily. That's what you're looking for. When you're looking for a longer term momentum shift, that's the move that you want to see. You want to see that ribbon kind of fold over, and it just that gives you that push, that momentum, right in here. Exactly. FPR. Now that doesn't mean that it's not worth, and I took shots in here. I mean, I was buying it down here before this pop up. I sold some on the pop too early. I was selling it like 18 bucks, 17, 18 bucks. So I didn't ride it all the way to 22. But when it made this move and that EMA cross hadn't happened yet, the radar was still up. Like, okay, this was a previous area in here of, that did act as support. I would expect there to be some resistance there. And sure enough, there was. Then it sold back all the way back down, right? Now you've got 1, 2, 3. That's a triple bottom right there. It comes down and tests it again and holds that level. This pop right here, I was like, okay, this is going to get good. Because now we get this EMA cross and we start moving to the upside, and now momentum is in our favor and it's pushing up. And now you can see the ribbon is moving up. It's all the momentum, all the EMAs have crossed, they're all pushing to the upside. And now you would expect that any pullback gets met with support and it continues higher, which it has done. But you can see the moment in time where everything kind of changes. Everything shifts right here. You get a feel for a chart and it's like, okay, this is clearly different than last time, just did not have the push that it needed. Now it's got it. So this is what I'm looking for, is this sort of thing. So this is obviously on the daily. Like I said, we'll go back to, let's look at some other time frames and get a sense of how the stock acts when it has potentially bottomed out. So you can see this is on a 34 minute, and you can see it chop around in here. You know, it went up and made that, popped on that ER. Obviously the EMAs had not flipped on the daily, but it pulled right back down. This actually didn't look too bad, and then it just got decimated. You've got kind of a head and shoulders in here, and it played out and then just sold off, came down here and kind of like skipping a rock, you know, on a lake. It kind of came down and just pop, 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 bouncing off this same level of support. So this kind of tells you that, you know, again, if you look at the full story, the bigger picture on the monthly, you expect that to hold. If that doesn't hold, that it's dead. Like, who knows where it's going, you know. And knowing this company has been around as long as it has, you know, I had a fair amount of confidence that it was not dead. In fact, there's more to that story, and that's why I played it. But you know, that's kind of what it looks like, you know, bottoming out there and then catching buyers, and everything just kind of flips. The momentum, you can feel it in the chart. People want in, they're willing to buy it, things are looking good, people are happy. There you go. Let's see. Can you talk about SPY day trade a little bit? Yeah, I will talk a little bit about that. Do you typically wait for the EMA crossover like that for an entry, or do you buy before? No, I buy before all the time. So the whole point to all of that was that you need to know, if you're trying to buy something at support, you're trying to play it at a level of support, you need to know what the longer term momentum looks like, right? In this case, if you were trying to buy MDP at support, after these EMAs had all crossed, the ribbon has flipped to the downside, momentum is clearly to the downside. Any play at support, you're trying to catch a falling knife. You're trying to stop the move down. You're getting in front of it, right? Until the EMAs flip and momentum is moving to the upside, now you should start be looking for long positions at areas of support. When it does this flip and momentum is clearly to the downside, you should be looking for short opportunities at areas of resistance, right? You need to understand on the longer term chart, what is the trend? Or is it going up? The trend is your friend. On the longer time frame, is it going up? Cool. You should be looking at areas of support for long entries. If it's going down longer term, or it's at resistance, you know, that's where you should be looking for short entries. But if you don't understand where it came from, and you don't understand the momentum and the environment that you're in and the direction of the bigger move, that's where you start getting just, you're trying to buy at support and it breaks that support again and moves down again, and then you try to buy the next level of support. You're like, I'm buying at support. Yeah, but you're buying at support on a on a stock that is currently in a downtrend. You're just going to get rolled over every time, right? That's why it's so important to look at those longer time frames, so that you understand, is the bigger picture pushing in your favor? If so, buy it, you know, play the direction, buy it support in an uptrend, sell it resistance, you know, to short, or a break of support on a downtrend. Does the flip need to be present on multiple time frames? Not necessarily. Really on the longer time frame, like on a daily, sometimes you get an early warning signal. I'll use like a 233, or I might use a 144 minute or something like that. But you need to know this longer term, right? You need to know the bigger picture. But on a shorter time frame, like a 13-minute, let's look at, I don't know, let's look at, how about Amazon? Why not? Actually, let's look at Geo. You will see, like on a 13-minute, how many times momentum shifts and it flips, right? And it's like moving the other way. It's a lot more, as you start zooming in on shorter time frames, you're going to get a lot more of those flips, but it's still absolutely relevant. So when we're talking about, and this is looking at this 13-minute chart, this is a good segue into, how do we determine swing trades, versus a scalp? You know, what would give you confidence or an idea that you should buy something with time on it and stay in it for, 2 weeks or 3 weeks or something like that? And that's where, I start with the longer time frames. So let's look at a 65-minute here, and let's try to get a story. Look at that. It just stair-stepped up. And I haven't looked at this chart very close, so this is, you'll see the process here as I do it. I see it came down here. There was a level here of support where it bounced. That may have been, sometimes you get those overshoots, right? Where it goes just past. You've all experienced that, right? Oh, I'm buying at support. 2 candles later, you get stopped out right before it moves up. Well, you get those overshoots, like areas of support of resistance and trend lines and things. They're approximate for that reason. So you can see that this has acted as support. This level, 50 bucks, has been acting as support. You can also see, if I just draw, all right, here's resistance. 57, right? But the number of times it can't kind of double bottom down here. This has been a great entry at 50 bucks. Even on the third time, it's a great entry at 50 bucks. And on the 65-minute here, you can see those EMAs flip. Right in here, and everything starts moving to the upside, making newer highs. Well, eventually, so this is a good point. This is a good point here. If you were buying up in here and it starts pulling back, right? How do you know if it's dumping or if this is just a pullback? And that's kind of where, trend lines and fibs come into play. So I would guess that if we come in here and we draw a fib on this move, impulse low, and I start, okay, there's a high, and you can see that 141 extension, which is pretty typical. So here's a high, pulls back to 786, and then runs higher to the 141 extension. Okay, what if I extend this up here? What does that look like? Look at that pullback. Go to the wick. Up here. So pretty close to the 50% retracement right there. It did hold above. If it would have given up that 50%, that 48.50-ish, that wouldn't have been a good look, in my opinion. Then you're at least going to test that 46.40. But it didn't. It held above that 50% retracement. So, a lot of times when we're trying to figure out, is something a pullback or a dump, or can it go higher, or is it going lower? A lot of times that's where the technicals come in, and you're looking at fibs. You're looking for reasons, technical reasons why things do what they do, so that you understand. F. Pierre, why did you go to that first point instead of going straight to the top? You can see, like, when you're measuring fibs, I tell people a lot of times, like, the Fibonacci tools are, it's a measuring tool, right? That's what it is. You're trying to measure, that percentage of an extension or a retracement or whatever it is you're looking for. You're trying to find that. So, and by definition, you're supposed to measure the impulse move, impulse low to impulse high. To me, that, when I think of it in those terms, it's like, okay, would this be an impulsive move? Well, a little, I guess, but then it just kind of went sideways. Like, what is where's the impulse where it's like people are chasing and FOMOing into this thing and they're buying the crap out of it? Where does that kind of stop or pause or take a breather, right? Okay, maybe here. And honestly, I could have gone here and then see if anything lines up, right? Now, why would I do that? Why would I go here and then see if anything lines up? Well, look, you get a pullback to the 786 and it bounces there and it runs right to that 1272 extension. Okay, and then it goes right through 1618. Now that it's made that move and it is now exceeded all of these extensions, okay, let me readjust this here. Really what we're trying to do, when I'm drawing fibs, I'm trying to figure out where people have their buy orders set. Where are the computers and the algos, where are those gonna fire, right? So if I come in here and I draw fibs and nothing lines up, guess what? It doesn't matter if my fibs are right or theirs are right or whatever. Mine are wrong. If they're not, if there's no price action near any of those levels, then they're useless, right? What we're trying to do is figure out when we're marking up lines of support and trend lines and channels and fibs, what we're really doing is try, because we can't move the market, right? I can't move the market. You can't move the market. So what we're trying to do is figure out where those buy orders are set or where those sell orders are set. That's what creates that support and resistance is, you know, everybody out there that has wanted to get in this stock, right? You got some people that are going to try it here and some people that are going to try to buy it here. Like that's going to happen. They're going to go into their platform and they're going to right click and they're going to say, I want to buy, limit order. If it hits 54, I'll take it, right? Okay, there's one group of buyers. It breaks that level, probably takes them out in a stop, right? Where's the next group of buyers? That's what we're trying to determine. That's what gives you the probability that you're going to have support or resistance is that all those orders have already been set. That's what the algos are. All those orders have been set, whether it's by retail traders, whether it's by hedge funds, institutions, whatever it is. There are certain levels where they have decided to buy and sell a stock, and we're trying to understand what their levels are. Just give me your map so I know where you're buying and where you're selling, and then I can play that. That's all we're trying to do. So if I draw my fibs, however I draw them, and nothing lines up, they're wrong. They're not giving me any useful information because it's not telling me where they're willing to buy or sell it. Let's see. Yes, Mr. Mike, generally speaking, when it's below its EMAs and the faster moving EMAs are below, have crossed and are below the slower moving EMAs on a longer time frame, that would be, yeah, you would consider that to be, you know, a downtrend. Now, how long will it remain in a downtrend? You don't know. So you throw up fibs and draw some lines and try to figure out where it might, okay, if it's gonna bounce and it's gonna find support, where might I look for that? And then look for that confirmation. Look at a 13-minute. Does it look like it's bouncing there? Are they starting to buy it? Is it putting in you know, higher lows, higher highs? Okay, maybe I found that spot where everybody's orders are going off. And usually we talk about volume a lot. You'll hear a lot about volume depending on who you watch and that sort of thing. And that's how I use volume, is like when it gets to that area of support, if that really is support, you should see an increase in volume at that level because that's where all that stuff's firing off and they're buying it, right? So that creates that additional volume. Same thing if you're trying to get through resistance. If it's going to get through that level of resistance, you need that increase in volume to absorb the supply that exists there. I've seen people draw fibs both ways. What's your reasoning on where you start the fib? I've seen people draw both at the same time, meaning zero top. Again, most of the numbers, if you draw top to bottom or bottom to top, most of them are the same, right? But again, it's really, what are you trying to measure? I always draw in the direction that I'm trying to measure or play. So if I'm trying to calculate or measure a pullback on an upward move, right? Okay, the move's going up. I want to measure an expected pullback, okay, then my 0 is gonna be at the bottom, 1's gonna be at the top. Everything above 1 is an extension of that move. A pullback, I am measuring that retrace. Okay, we retrace right to the 786, which is very common, right? That's a common area where in a strong uptrend, you get a pullback. It will often come back to 786, and that's where it will bounce and continue its push up to the 1272. That's in a strong uptrend, strong momentum, that is very, very common. On the flip side, if something is in a downtrend and I'm trying to figure out like this move right here, let's look at this one. Okay, clearly weakness. This is trending down, right? I could start up here with my 0, but if I want to get the impulse move, let's measure this. Let's say, okay, this is where it looks like panic set in and they just sold the shit out of it, right? That looks like the impulse move. What happened? Well, it retraced to that 786 and found some resistance, pulled back a little bit. It did make it through the 786. Where were people looking to sell it? Right at that 618, right? And it rejected the 89 EMA here on a 65-minute chart. It cannot get through that, right? What does that tell me? Well, it tells me it rejected there at the 618. You had multiple areas of potential resistance here that it is rejecting. It could not get through. That tells me that we're not out of trouble yet. There's still weakness until it can get through that. Okay? So it rejects it, comes down, rejects it again, comes down, puts in something that, you'd say, okay, there's a higher low, right? They weren't able to push it. The bears could not push it below this previous level of support. So it put in a higher low, and now it starts pushing. All right, now we're through the 89 EMA. We come up, we do a full 50% retracement of this move. That's a full 50%. Right? And then it consolidates and goes sideways. And then you get this nice push up. Everything's above the moving averages. The ribbon starts to expand and spread out, and you really get some nice momentum to the upside. And it, again, that 382, you can see that reaction there. There was, definitely other people looking at that line, right? There was a reaction there twice. And then once it breaks that, then you get this new, where it decides to make a nice push and it tries to reclaim some of this. Let's look at this chart. Let's go to a 144. It's a 144 minute. This move right here, when it broke this previous where it fell from, look at that move. When it broke out of that resistance, that's the kind of, it's like, if you charted this and you drew all this out and you saw this happen, that's when you go, okay, I want to buy a pullback, because the momentum is there. You get this break, you would expect some continuation. The momentum is in your favor. You don't want to buy the, top of a green candle. You don't want to buy when it's, this far away from its moving averages. When price starts to do that, it reverts, and eventually you'll get that pullback to the moving averages. A lot of times the 21 EMA is a good place to buy. You can see this pullback to the 21, and then it just, continues higher. Now, again, you're really far away from these moving averages. You get a pullback, and then you get that flip right here. Okay, things have cooled off, slowed down. But look at what that tells you right there. How much information is contained just in these fibs on this, where you might look for resistance on a bounce or on the way up. And the reason you're looking for resistance there, right, is you measure this, and you know the exact opposite of trying to measure that uptrend and a pullback to support. You know, if you're a bear, if you're bearish in GM and you want to short it, you don't want to short it down here, right? That's when it's dangerous to short. This is where they're taking profit. You know, it gets down here, it bounces. You're like, okay, we're going to get a bounce. That's fine. I want to short it again. Where would I look to short? Well, you might look at the 786 right here, and obviously people did, but then buyers came in and pushed it. So it's like, okay, I got short here at the 786. This bounce here, okay, I got stopped out. Where's my next short opportunity? Up here at the 618. Okay, so it keeps going. It gets up to the 618. Bears step in and they try to take the wheel again. And they push it back down, right? Because there's people that are sitting here waiting to pull the trigger because this is in a downtrend. They're going to short the bounce, short the pop, and try to ride it lower. That's what creates that price action right in there, right? And then it consolidates. This is people going, okay, well, we tried to go lower, we failed. We tried to go higher, we failed. So this is discovery. This is just figuring out which way we're going to go. Where should price be, right? Bears keep failing, bulls keep failing. There is a pattern in here that I'm not going to get into. But once it makes this gap move up, all of these people that were, you know, trying to short every pop, they're like, okay, I've had enough. That's enough. That's greater than 50% retracement. You guys win and the bulls take the charge and they make a nice little run there. Is that helpful? Hopefully that sheds some light on, you know, how you would look at something like this. A lot of it is the technical levels and then trying to, you know, try to understand the mindset of both sides and where they would be looking to short versus where they would give up and where longs would be looking to get in. Good. Okay, let me try to catch up here. What indicator is that under the chart? That is the Bender's off chart alpha, which is, I'll post links to those guys. You both the indicators that I use, I'll give you guys links to those. Sure, Mike. That's what mine look like. How often do you redraw your fibs? It depends. If they're no longer relevant because price is way above or below, then I don't need them anymore. And you know, if another impulse move has been made, now a lot of times I don't know if you've ever heard the term fib cluster, but if you have multiple fibs that line up on multiple moves or multiple time frames, that increases the probability that you will get a reaction at that level, right? So sometimes it's good. Like I'll go back when I'm drawing fibs. Let's look at this again. So there's there's measuring this move on the 144 minute. Let's go to the daily. And we already measured the down, this move down. So let me get rid of that. That we're above all those levels. They're not relevant at the moment. They don't matter right now. Let's try to come up with another move here. So let's say, I don't know, start here. That was a bit of a, you know, impulsive sort of buying spree, right? And it came down, and it when it pulled back, it came right down to the 618 before moving higher. Echo, cancel. All right, sorry guys. So it pulled back to it pulled back to the 618, right? Before bouncing. Now what I would look for in here, as it bounces, and then we have our next move up, are there any, you look for, are there any places where fibs line up, where there's multiple fibs, again, multiple time frames that line up? I don't really see any, in here you've got one, that 141 and this 1618, okay, those line up. But when you get multiple fibs on multiple time frames that line up, you get, that's known as a fib cluster. And again, it increases the the probability. So let's take this move all the way down here. Is there anything in here, that would line up? I don't really see anything. So you can see there, get rid of that. Oh, that's exactly the same drawing. See, if you go the other way to the same level, which is what I did, this level right here, that previous resistance, I measured it the other direction. It was the same level, but I went from bottom to top, and you could see the numbers, bottom to top, bottom to top. If we go this way, you see how these line up. So the levels, it doesn't matter which direction you go, the levels or the lines will line up in the same places. Anyway, so yeah, anyway, I will go back, and look for areas where there's multiple fib levels that coincide. And that gives you that higher probability trade. We call those, like I said, fib clusters. So here you go, the 50% retracement of this first move was also the 50% retracement off this move. So if you had pulled back, you would expect that to be, all right, this move was the same. Anyway, let's see. What if you drew your fib a little before it dropped to 22? Now I got to try to go back in time a little bit.
Motion detected at the front door.
I think I'm too far ahead that because you said, what if you drew your fib a little before it dropped to 22 and then dropped further down to 14? Do you disregard your fib and redraw from the newer lows? So when you're on that GM example, where'd you enter? So Syed, again, if you're in an uptrend and you're looking for what might be a pullback versus a dump, right? You can see right here that 786 on a strong move up, that 786 should find buyers. But you're going to see buyers trying to step in at every level. If they don't, and this thing, and it were to just free fall like MDP did and just disregard every fib level, it's like, okay, there's not a buyer in sight, right? But in a stock that's moving up, you will find some buyers at every level. So, these are 786, 618. A lot of times, if it breaks that 50% level, like I said, it's a lot of times it'll retrace the full move. But they're both decent entries. So the 618, if you're not, I often am not waiting for confirmation, right? I want to buy on a red candle. I want to buy when the thing's on its way down. And, a lot of times I'm trading options, and that's when the options are cheaper, right? To buy calls. You don't want to, like, if I wait for confirmation, the premium starts going up, right? Now, that said, if you want to wait for confirmation, you watch that level, and like right here, you get this double bottom. As soon as it starts pushing back up, you can get in, right? And you know that, all right, if it breaks this 786 to the downside, I'm out, right? Even this first bounce, and then it pushes up and pulls back to recheck it, it's like, okay, but I'll try it here. When I see this setup, I will try it here because I know very quickly if it's not going to work. You don't have to let this thing come all the way back down to 36 to see if you're right or wrong. You get out and you try again at the next level, that 618, 34, 37. If it comes down and it tests that, you try again. If you're wanting to take it long, if the momentum is to the upside, you're wanting to take it long, you try there again. And if it doesn't hold, if it doesn't do this, double bottom, start moving up, if it doesn't do that and it cracks that line, you're out, right? The idea is to be able to take those lower risk shots and to know quickly if you're wrong, so that you're not buying something and then it drops, $20 on you and you're like, oh my gosh, I bought the worst stock ever. No, you just bought it at the wrong time. And you didn't know when to get out. Mr. Mike, the off-chart alpha. Yeah, I actually have a video on how I use that, but it's essentially 3 indicators combined, right? This is a KST indicator in TradingView. It uses the Ichimoku cloud. That's what these dots are. And the area, the shaded area, this is a sentiment indicator from TradingView. And I had all these indicators on my charts, and as I used them and watched how they reacted, and when certain conditions were met, it was very favorable. I'm like, I want all these in one indicator, and that's essentially what it is. It's got all that information, only takes up one indicator slot in your plan, and it's simple for me to look at. So I'll post the video that I did on kind of how I use it, but I look for, when you get this flip, when the blue line crosses the yellow line to the downside, and you get this sentiment flip here, that typically means you're going to get a bigger pullback. It's not done yet, right? And so I look for, like, if I'm looking long, I like to see this right here. This blue line crosses the yellow line to the upside, sentiment flips to green, right? The more divergence there is between these two lines, the better. It means there's more strength in the move. But this is what I like to see right here for a swing entry, on like a 144 minute or a 233 minute or a daily, like when I see that flip, because that'll usually give you a couple days of momentum, right? You got 3-4 days in here that you can play with. So that's what I'm looking for. Would you mind showing fib on last week's chart of what? GM? Okay, yeah, sure. And Mr. Mike, here's a link to my TradingView profile. This right here this is a video on how I use that off chart indicator. And in fact, the links to the indicator are in that description. If you click on it, I don't want this to play. Right here, you just click this image and that will take you to the indicator. Click the thumbs up and that adds it to the favorites, and then you'll have access to it in TradingView. It's in a private repo, but it's free. You can go use it. Okay, so let's see. We talked about different time frames, trends, fibs, a little bit about the indicators that I use. Again, when it when you're trying to identify, we start with that if this then that. Okay, every time it does this, it does that. When it does this, it does that. Okay, so you would expect that that would continue, right? Every time I pull up a chart, the first thing that I'm looking at is just visually, just by eye, do I see anything that lines up? Do I see any sort of, can I find any sort of trend in here that seems like it would line up? And I typically start with the parallel channel. I look for a trend line, two lines that that I can see that intersect, that look like maybe they would be parallel. If I extend it higher or lower like this, and I go, okay, does anything line up? Well, you can see, obviously, there was reaction here at the bottom. This was the channel, but it broke out of that. It used the bottom of that as resistance, came back, tried to break in. It got in, but then lost it. Once it did get back in, it ran all the way back up to the top of the channel, right back down, tried to use the bottom there as support. When it broke out, it really broke out this time. Right back down into the channel, coming double top, pulled back. We're right at the midpoint of that channel right here. Like I said, anytime you draw a parallel channel like this, you will see action at the midpoint. Typically means that you've got them kind of drawn correctly. Yes, I do not use the linear regression channels. This is just how I do it. I know plenty of people do. And listen, I tell people this all the time. There are more strategies out there for trading. There's so many different ways that people think about it and approach it, and tons of people are successful doing it in different ways. They see things different, they draw things different, they use different tools or different indicators or whatever. It doesn't matter as long as they've developed a system that works, right? So much of this, of what we do, is developing a system that works for you, right? There are certain strategies that other people use in the way that they draw charts and look for support and resistance, and all of the patterns that they try to find, and that just doesn't work for me. I have found what works for me, and so much of this is just figuring out what works for you and continuing to refine that and understand the conditions that give you the highest probability to make a profitable trade. And just because it works for somebody else doesn't mean it works for you, right? So much of this is just spending time in front of charts and drawing lines and trying to find the patterns and setups that appeal to your eye and allow you to have the confidence it requires to enter that trade and exit and know when to enter and exit. Obviously that is the most important, knowing where can I take a reasonably safe entry? How do I know if I'm wrong? Where should I look to take profit? Like, you have to be able to answer those three questions. And if you're not seeing something right, if your eyes don't tell you what you need, your brain needs to know, then you go back to the drawing board and you say, okay, well, I do it a little differently. This is what I have found works for me, but everybody does it a little differently. That's what makes a market. Colonel Kane, the off-chart indicator, what time frames work best? I will tell you that it is different for different tickers. Generally speaking, I like to look at like a 233 minute because I want that longer. I want more time to be able to play with it, get in, get out, make adjustments to my position. So a lot of times I'll start with that 233. You get, once the indicator flips in your direction, you tend to get more time on that move, right? There are other tickers that, it like Amazon, it's a lot more difficult because you may not want to swing those contracts. They're not cheap, right? So on something like an Amazon, usually when I'm looking at that, I'm looking at it 13-minute, but you can see how, just back and forth this is. And I know personally that for me, when I'm trying to use this on something like Amazon, I need to see like a big divergence between these two lines to really get the move right. But you can see it here on a 65-minute. That's pretty good right there. If you were looking, okay, sentiment flipped, the line slipped. The problem is with Amazon, it can move so far before these things cross and stuff that I have a hard time using this to trade Amazon. Because if you wait until that flip happens, you may have already missed the move and then it bounces and goes, $30. So I wouldn't say it's great, for trying to trade something like that. But other stuff, it works, stuff that doesn't move like this, it works really well. Now, I will say that Amazon being stuck like it is right now, let me look at this. Amazon kind of being, obviously it's a really wide range, but this is Amazon's home right now, right? This used to be its home. Now this is its home right now. It's not a bad, entry. I know lots of people that are buying Amazon here, 2,900. Not a bad spot if you were looking to go long. So something like this, being that it's done this back and forth, I would look at this on a longer time frame. Because normally it flattens it out. You can see this just back and forth, this just chop. And this is what I do. I'll look at it, I'll pull it up in multiple time frames and just try to get a sense of, what it's doing. So on a weekly here, you can see definitely like flattening out here. And you can see what happens when it just kind of, like it did right in here, where it's not making any big moves. This is just a slow grind up. And then you get a nice little acceleration right there. It flips, pulls back. This is a weekly chart, right? So when you got this flip up in here, you had 2 months, 3 months to basically target downside on, shorting the pops and targeting downside. And then you got the flip right in here, and you got this move right here that lasted a couple months where you would have been targeting long, on pullbacks. Same thing here. You got the flip. You had this consolidation that was just sideways, right? But then you got the flip right here. Sentiment goes green, and this thing just starts taking off, right? And this was months that you would have been targeting pullbacks for upside. And now where we are now, to flip back over, it's kind of flattening out as it consolidates in here above 2,900. Now I would look for this to either roll over to the downside, break out of this channel. Now I'd be targeting downside. Or it's going to kind of flatten out over the next couple weeks and make that curl back up, and then you're up here targeting, you know, moves to the upside towards 3,800. All right, let's see. Can you talk about SPY day trade? Just curious. Find out what works for you according to channels. You can pull back. Throughout your trading career, how often is it you have encountered the need to switch up the way you use your indicators due to changes in the market itself? I don't know that it's changes in the market itself, but I've probably changed the indicators that I have used. I don't even know, 10 times at least through trial and error. I will say that these two, using the indicators the way that I use them, these two, and nothing else besides drawing my, you know, the fibs and drawing my lines and stuff, this is what works for me. I don't have any other reason to change it. And I would say that the market conditions don't force me to change anything. I'm just waiting for, I'm waiting for a shift in direction and momentum, and then that's the direction I start playing, right? But the indicators themselves, the way that I have them now are very simple. I don't use RSI, I don't use MACD on these charts, but understand that every indicator or oscillator, you know, there's really only like 4 categories of them, and they just all do things a little differently. So if you're talking about RSI or MACD or one of the other, you know, 500 indicators that you can use, they tend to fall into one of 4 categories, and they give you kind of the same data, just in a different way. So there was an alpha gold for the 416.60 call on GM. And you want to know what I think about that? I wish I would have already charted GM and I wasn't busy doing other stuff, because I might have been interested in this. You can see on the weekly, you know, it putting in this bull flag here at the top. This is a good sign that it's holding up, you know, it's holding up well here. And especially being like near that $50 level, for me, that is, you know, relatively low risk trade, because if it breaks, you know, you have this trend line channel here. Let's say the bottom of that, you know, this $50 level, you would expect that to hold. You have that 1272 48.26 just below it. You've got these, you know, EMAs below it. Let me zoom in a little bit. Let's go to a daily. Yeah, I mean, you don't have to give it a ton of room before it's, you know, going this way and you're like, oh, yep, I'm down. Oh, no, I'm wrong. Let's go to a 144. Yeah, I mean, if I would have pulled this up when that alert hit, I would have bought it here. These are the candles that were put in on Friday. So seeing it at this level of support right here, 1, 2, 3, 4, seeing it at that level, and it's right at the middle of the channel right there, that's a great entry. I would have taken it. Actually, I think I did. I think I'm in that. Hold on. I'd have to pull up E-Trade. I think I'm actually in that. I think I did take that. Yeah, my pleasure. Shaheem. Might have been a little busy with that one. Okay, let's see. What else can I give you guys here? Oh, I was going to talk about market internals just a little bit. So this, anybody interested in this and kind of how I look at this stuff? I mean, I don't want to put a, you know, I don't know how long we've been going. And we're an hour and a half in already. Maybe I'll save that for the next one. And we'll go through this stuff. Yes, please. Yes, yes, yes. Yes, yes, yes. I just want to be respectful of people's time, right? Like, once you start going hour and a half, it gets a little long. Okay. So this is when we talk about, yeah, I'll do like, this would be a little quicker. We'll do this a little quicker. I'm gonna grab some water. Give me about 30 seconds and then I'll run through this. Okay. All right. I'll try to keep this a little shorter, and maybe we'll do another session and go in a little deeper. But this is kind of how I set up my day, right? I try to get an idea as to, all right, what did the futures do? Where are we sitting? So the first thing I'm going to do is pull up the ES chart and just try to get a sense of, make sure I understand where I'm at, what we should be looking for. And you'll hear me, like if you're in Black Box, most of you are, you'll hear me, you know, in the morning talk about the levels that I'm looking for or looking at or paying attention to, right? Because these are very important. When we get this, so the current market sentiment, bearish, cautious, waiting on stim, doesn't affect your trading. No, it really doesn't. Yeah, I mean, I block out most of that stuff because the chart is going to tell me what I need to know. Was the news good? Was it bad? Did the market like it? Did it not like it? The chart is going to tell me. Right? So it doesn't, I like to know. I mean, sometimes it gives you like, you know, if you know something's really bad, like that's really bad. Okay. At least short term, you know, if we've run all day and all of a sudden something comes out that's really bad, it's like, okay, short term, at least I can play some downside, get in some spy puts maybe, try to scalp them. But it all comes back to the levels for me, right? So I've had conversations with a few people recently about whether or not I'm scared about, you know, everything that's going on. Should I be worried? You know, what am I expecting? And, you know, my answer is the same, is like, I'm not scared. I'll play whichever direction we get longer term, right? I'm not worried, But here's what I'm seeing right now is we have this from March lows, go all the way back to the March lows. You can see this trend line that we gave up, right? And this doesn't line up perfectly, but you know, a lot of times they don't. If I scale this out to like a daily or a weekly, it will. But you know, you can kind of see this where we've been, you know, from if I line that trend line up to the March lows, it's like, okay, we came down, we used that as support. It was used as resistance right here. Resistance again, sideways along that center line, down to support, back to the center line, and then we gave that up. Well, am I worried? No, because that'll happen sometimes. And technically speaking, if I measure the move with fibs, we came down to a retracement right to 786, right? So to me, as long as that holds, we're still in good shape. And you saw that rally that we had the latter part of the day on Friday, right? You know, that was a nice move, nice push up from this 786. We came down here and we based, we put a base in here and then pushed up. If the bears were going to take control, they needed to do it here. They needed to break this 786, this 3724-ish. They needed to break that to make a push towards, because there's going to be more buyers at 3618. There's going to be people that are trying to buy it there. So they'll have to push through that, try to get to that 3543, you know, and that's when you start breaking those levels of support, those fibs that you would expect to hold. That's when shit hits the fan and, you know, we get that nasty, nasty sell-off. But as of right now, that's not what this is looking like. It's like, okay, we got out of the bottom of this channel, but now we're back in it. So I think we're set up, and we'll see how tomorrow opens and how we come into Monday morning. But if we're inside this channel, then I'm really just going to be looking to see if this can hold and we continue the push up. If so, in my opinion, this was a very nice technical, you know, it felt like shit, but technically speaking, there's nothing wrong with it, right? It's still healthy. Now you'll see, you know, inverted yield curves in bond yield, and the prices of metals are all having an impact and everything else. And, you know, who knows, but the chart will tell you. So this is how I start my day as I look at this and try to figure out where we're at. And okay, if 3724 breaks, then I know that at least short term, you know, we're probably going to see some more downside. The next level that I would look at would be where I drew this line, this previous level. Now, the only reason that I think it reacted there was because that was that trend line, right? So this level may not even be important anymore. You can see it being a previous level of support. So we'll keep it on the chart. And if 3724 gives, then 3651 would be the next line I would look for. If that gives, 3618, right? So I know where I'm at. I know what I'm looking for. I want to get inside this channel so that we have a chance to start moving up and hopefully go break this 3860 right here to have a chance at the 3960 level. Yes, I will on Neo. Let's get through this and I'll take a look at Neo with you. What made you choose the top of that fib at 3860? Because if I'm measuring the impulse move, right, this is the first time that we really, it looked like, you know, to me, when I'm looking at this, that was the first place that it looked like we really, you know, sellers really stepped in and, you know, buyers weren't right there willing to catch it. So that to me is where it looked like it had changed direction. And I tried a few different levels, and you can play with it, right? And you may get more of them that line up. Again, it doesn't have to be perfect. Really, you're just trying to figure out what lines they're using and where you might, you know, see that reaction. So if I draw it here, look, the 141, okay, there's a top there. This was a previous line up here, but it's near that 1618 extension. Great. Okay, so it reacts. So at the end of the day, it doesn't really matter as long as your lines, give you reaction at those levels so you know what they're looking at. If I just come in here and I, pick, I don't know, like something random and nothing, seems to fit or mesh, then it's like, okay, my lines don't matter because nobody cares about them. Nobody else sees that being anything of value. So it's not helpful. It doesn't really matter. So that's all. And there's plenty of times where I will draw fibs and then I'll look at it and I'm like, God, this doesn't tell me anything. Like nothing lines up. All right, let me try, maybe they're looking at this one. Ooh, okay, that lines up. That's all. Yeah, exactly. Okay, so I do this first. I try to see where we're at. I'll go in and I'll look at like a 13-minute and just kind of get a sense of where was the highs, where were the lows, overnight, yesterday. What levels should I be paying attention to here intraday? So you know the landscape. You know what the score is. And then the rest of the day, once I have those levels, the rest of the day, this is kind of what I'm using. Like, I don't, if the market is showing weakness in here, I'm probably more hesitant to take a shot on something long, right? Well, how do I know if the market's showing weakness? And that's kind of where this setup kind of comes into play. I'm watching UVXY. If UVXY is at a level of support, or what looks like, okay, UVXY is moving up, it has pulled back, this VWAP may act as support, I might want to wait, because the better entry is if my ticker goes sideways at support, UVXY, makes a pop, I can see that, okay, maybe, this would be a good area, like we should get a little pullback on the UVXY, dollar made a pop, maybe it's getting a little pullback. The tick is up in my favor, which means there's buying coming through. It's over 600 or whatever. Okay, now I can, if I'm scalping something, now I'm going to buy at support and take a shot long. Understand, this is far more important when you're scalping or playing shorter term, you're playing weeklies or something like that. This stuff is way more important. When I'm swinging, I'm playing positions that I have contracts that are, a month out or 2 months out or even, a couple weeks out. Like this stuff is not that important. Like what happens intraday, tick, trend, the dollar, UVXY, like this stuff it doesn't matter to me. This is more intraday scalping or, playing weekly expiration type stuff and I'm trying to get the best entry. That's where this stuff really comes into play. Now, I will tell you this, that using the tick and this UVol-DVol indicator in TradingView, you can see days where we had these sell-offs and you can see, the buy volume, the sell volume, the volume that's going into stocks that are pushing down versus the ones pushing up. It's like everything on this chart tells me that there's weakness right in here, right? And at the same time, you'll see the tick, you'll see back-to-back ticks, negative 600, negative 800, negative 1,000, negative 900. That is not the time to jump in front of the bus, right? When they're selling absolutely everything and you're getting low tick after low tick over negative 1,000, that's not when you go buy a weekly call. You want to stay the hell out of the way until that settles, right? FPR, longer term plays for me is more about the ticker itself and this ES chart right here. If if I'm playing something like, let's say I'm playing March expiration and I got 2 weeks left on it and this line gives up, I'm probably just going to dump it, whatever it is, because if this line breaks, it's going to drag a lot of other stuff down with it, right? So, you know, something that I don't have out till September, I'm probably just going to hop out of. And you might even see me, you know, if I've got a full size position on something out to September and this line breaks, I might even dump some of those in hopes that I can pick it back up at a lower price. So longer term stuff, like this is where it comes back for me is ES and NQ, and understanding where, you know, if I'm playing tech names, then I'm obviously I'm more concerned with what NQ is doing. If what I'm playing is not tech, it's all ES for me. So yeah, if it's longer term, I'm really just kind of worried about this. If it's shorter term stuff, weeklies or scalping intraday, this is what I'm looking at. NQ is the NASDAQ futures. So I also look at Trin. You can do a little reading on Trin yourself. Essentially, it gives you an idea as to how much protection is being, you know, put on. And there's certain numbers that matter, like anything over 1.6 or anything under 0.8 have significance. But to really understand that, you should go just read about the arms trading index, which is what Trin is. UVXY, obviously just a volatility indicator. As that tends to rise, a lot of times you will see weakness in the market. The dollar, when the dollar is good, stocks are bad. They tend to run inverse. Casey, I think it's pinned in my mod room. I do believe. I do have sharing on, so I should be able to take this chart and just do that. And you should be able to access it. All right, and then last, I will take a look here at, you want me to look at NEO. Here's a previous, some fibs that I had drawn, but let's take a look at that. I haven't looked at this chart in a while, to be honest. Let's scale this out. Yeah, absolutely. My pleasure. So I could see, you know, if I start with the biggest impulse move that I can find that kind of encompasses all of it. That was the first kind of pullback there, but let's say, okay, here's the entire thing. Does that seem to matter? Let's go. Yeah, you had that 618 where it tried to bounce and then it rejected 786 before giving that up. It's done a 50% retracement. It actually broke that level down there at 32. So it broke that 3450 level. Let's see if we can tighten this up at all. It doesn't give me anything valuable, really. You can see this level right there has acted as support a few times. So if you draw the fib, if you put the impulse high there at 56.91 before this pullback, I mean, this was all just aggressive buying, right, until you get up here to this 56.91, 57.30. If I really zoom in and try to get the top of that wick, right? That would put this where we're kind of trying to, if you had that overshoot, pull back up, then you look for that to be support right here, 36.19 or so. You know, you could see that being a pullback to this 618 off this move. Now, I don't know how well it's going to respond or react there. You know, a lot of times on something like a Neo, they can be a little more difficult because they don't quite act the way that they should, right? And the reason why is because there's not as much history there. There isn't as much experience in the name. And that's why, you know, it's so much different when you're looking at something that's been trading, you know, heavily for the last 15 years. Why those lines are so important and they work so well is because that thing's been through some shit, right? That company has been through all the news headlines, good and bad. There's been scandal, most likely. There's been, you know, there's been some drama. There's been some really good times and some not so good times. And those lines where they're willing to buy and sell over the course of 15 years, like, that's why they're so powerful. Now, when you're talking about a ticker like Neo that's really only been, you know, a hot topic for a year, and the kind of move that it's made, and what I would still be considered to be, you know, somewhat of an unknown in the way that we don't have years and years of financials and whatnot. You know, they tend to, they may not always act right. They may not always act like they should. You know, the fact that it gave up that $40 level is not a good sign, in my opinion. You would want it to really quickly get back above that and start moving up. If it gives up this 34.50, that's like, again, that's where it gets pretty scary. You do have some support in here potentially. Not much, you know. Again, that is a very short period of time where that acted as resistance. So would I expect that to be some serious support area? Not really. But if you're just drawing lines, like, there's a couple of lines that you could look for. If I was trying to play this long, you know, for me, if you're buying in here, it's not bad, right? But if you're buying in here, if it gives up 34 again, if it's me, I probably just move on to something else, because then, you know, you're probably going to test 30, see that whole number get tested and see if that holds. If that doesn't hold, then it, you know, continues to nosedive. But oh, Neo, absolutely. Do I recommend the TradingView premium level plan? I can tell you what the differences are. It's not really what, you know, what I recommend. It's more about the feature differences and what you think you will use. So, and by the way, anybody that doesn't have TradingView, if you're gonna try it out, use this link. That is my affiliate link. But if you look at the plans, let's see, where are their plans? Let me sign out here. Okay, so here's their plans, right? The difference here between Pro, Pro Plus, and Premium. I have Premium, um, but the difference between them is the number of indicators per chart. Now, for me personally, uh, for the most part, I only need 2. However, on my market internals chart, I use, I think, 4 in total. So the number of indicators per chart, 2 charts in a window versus 4 or 8, right? That's a big difference. So here's a chart that I stare at a lot. That is not what oh, it's because I signed out. They're going to make this very difficult on me. Hold, please. Let me sign back in. Okay, so this is the desktop app, which I was already signed into. And one of the views that I look at looks like this. So I have 6 charts here. So I can kind of draw some lines, draw some levels, and I can keep an eye on, 6 tickers at the same time without having to flip around and, that sort of thing. Once I've gotten the levels drawn from the longer time frames, I'll draw them here. I'll draw those price levels, and I can watch 6 tickers at the same time and see when they approach or cross or whatever, right? So for me, I need to have at least 6. Sometimes I set this up with 8. So if I go back to the plans, this gives you 2 charts in one window. This gives you 4. This gives you 8. So that's kind of up to you as to how many you're going to want to have in a single tab. Keep in mind, you can have multiple tabs open, but it's how many charts per tab that you want to be able to have. The server side alerts, 10, 30, versus 400. I don't have any idea how many I have, honestly, because I set up alerts on charts all the time. I've never had to worry about it because I have 400 of them. I suppose I have not hit that limit yet. Intraday exotic charts. I don't even know what the hell that means. Second-based intervals. I think this is like you can actually do tick count versus seconds, I believe. Charts based on custom formulas. You can do like something minus something else. I don't know what else you can do, but you can put in 2 tickers and basically see the difference between them, the 2 of them. I don't use the chart data export feature, and indicators on indicators I don't use. So really, I think it's the biggest difference is this 8 charts in one layout, 4 charts in one layout, 2 charts in one layout. I think that's kind of what makes the decision for you. And yes, Robert, when you do the trial, they give you a discount for a yearly upgrade. I never got 60%. But I do think I paid $288 for premium. I didn't get a 60% discount when I did the trial. I bought it at I buy it every year. It renews during Black Friday, Cyber Monday, and they offer that same deal. So if it is something you end up buying, then yeah, I would just go monthly for the trial, and then you cancel it or turn off auto pay, and it will ask you why you want to turn off auto renewal, and there's a radio button that says it's too expensive. You click that, you click submit, and it will throw an annual discount at you. It'll say, okay, well, if you pay for a year, we'll give it to you for 50% off or whatever. All right, I think that is enough for today. Hopefully that was helpful. Hopefully you guys got something out of it. I'll try to think of what we might do next. but hopefully it at least answers some questions. And, you know, if you're in Discord, in BlackBox, you know, gives you a better idea as to what we are talking about. Yep, I think it's about that time, Sam. I think it's about that time. What do we got? It's after lunch. It's 12:30. Y'all help me get over that 12 o'clock hour. All right, guys, and go enjoy the rest of your weekend. And we'll be back at it on Monday. Thanks for stopping by. Hopefully this is recorded. I'll post a link to it for anybody that missed it or wants to share it with anybody else. Thanks all. Catch you later.